Hello traders, welcome back to day 24 of our trading podcast series. Today we are diving into an essential topic for any trader, adapting to different market conditions. Whether the market is bullish, bearish or trading sideways, each type of market environment presents unique challenges and opportunities. In this episode we will explore strategies for each condition so you can feel confident making informed decisions no matter which way the market is moving. Understanding how to identify and adapt to these conditions can be a game changer for your trading journey. So let's get right into it. Let's start with the bull markets, which are characterized by rising prices and a general sense of optimism. In a bull market, the overall trend is upward and investors are generally more confident. Here is how to make the most of a bull market. Trend following strategies. In a bull market, buying into the trend can be one of the most effective strategies. Momentum based strategies where you can follow the price as it continues to rise can help you capture gains as the market climbs. For example, buying breakouts at key resistance level or using moving averages as confirmation can keep you in line with the trend. Focusing on growth stocks. Bull market tend to benefit growth stocks as companies with high growth potential usually see more interest from the investors. Look for stocks that not only have strong fundamentals but are also riding the bullish wave. Gradual scaling. A great way to maximize returns in a bull market is to add to your position gradually, also known as pyramiding. As the stock or asset continues to rise, scaling in allows you to compound your gains while maintaining a low risk entry each time. However, be cautious and set a clear exit strategy. Bull markets don't last forever. Now let's talk about the bear markets, where prices are generally declining and sentiment is often pessimistic. Many traders find bear markets challenging, but there are strategies to make these conditions work for you. Short selling. One way to profit in a bear market is through the short selling. Selling a stock you don't own in the hope of buying it back at a lower price. Short selling allows you to take advantage of falling prices, but it's important to be cautious as losses in shorting they can be theoretically unlimited if the stock price suddenly rises. Defensive sectors. Certain sectors like utilities or consumer staples tend to perform better in bear markets. These are often less affected by the economic downturns as they provide essential goods and services. Hedging with options. Another way to manage risk in a bear market is through hedging. Option strategies like buying put options allows you to limit potential losses while still retaining your long positions. Finally, let's look at sideways or range-bound markets. In this condition, prices tend to fluctuate within a narrow range without a clear trend up or down. While sideways markets can be less exciting, there are specific strategies that can work well in these conditions. Range trading. One of the primary strategies in a sideways market is range trading. This involves buying near the support level where the price tends to bounce up and selling near the resistance level where it typically pulls back. Using indicators like RSI or Bollinger Bands. Range-bound markets can benefit from indicators like the RSI or the Bollinger Bands. RSI can show when an asset is overbought or oversold within the range, helping you time your entries and exits. Bollinger Bands can also indicate when price moves are about to reverse by showing volatility and potential bounce points. Smaller position sizing. Since range-bound markets often have limited potential for big gains, it's wise to use smaller position sizes and take profits more frequently. These markets often require a more cautious approach as prices can remain stuck in a tight range for a longer periods. An important and often overlooked strategy for many market conditions is knowing when not to trade. Not every market condition or the environment is suited to every strategy, and sometimes sitting on the sidelines is the best move. If the market is too unpredictable or volatile for your comfort level, remember that there is no harm in waiting for a better setup. To wrap up, let's quickly recap the today's main points. Bull markets offer opportunities to buy into trends, favor growth stocks, and use scaling techniques to maximize returns. Bear markets are all about minimizing or the managing risk through short selling, defensive sectors, and hedging with options. Sideways markets are ideal for range trading using RSI and Bollinger Bands and adjusting position sizes to suit the conditions. Each market conditions has its own unique challenges and opportunities. Adapting your approach can help you stay flexible, protect your capital, and even thrive in different market environments. Mastering these strategies makes you a versatile trader, capable of handling any market with confidence. Thanks for tuning in today. Join me tomorrow for day 25, where we will discuss trading in high volatility environments. It's going to be an exciting one, so don't miss it. Until then, stay sharp, stay patient, and keep trading smart. Thank you everyone.